Happy Monday, happy trading. Nothing I'd rather be doing on a Monday than trading. So we did some pre and we looked at the charts early before the video, and we saw that the stock with the most flow just happened to be the stock that we traded first. It was CVX. We were late to the market, about 6 minutes late, woke up late. Didn't get the very open, but we did get the about 6 minutes late. If you look here, you can see this flow. We got in here. We got in one lot. We only could afford to do one lot. Let it go down. It came right back up. We counted that as a red bar takeout. Got in our second lot. So now we have two lots, and we got out quickly. Now, based on the information that we learned yesterday, that's not what we were supposed to do. What we were supposed to do is ride longer, but we just didn't implement it. Had we have got in at the beginning of the market, it would have been, hey, tail bar, stop. Probably could only afforded one lot. Green bar takeout would have been right here, and we could have rode that thing all the way up here, or tried to, but we would have rode it a little bit differently. I think we were just trying to get a positive trade, our first trade, as bad as that may sound. It was a good trade, good as profit-wise, but definitely could have been done better. As soon as we got out, it went down, but then it was spiked right back up, spiked right back up. So that's what we did. Now, if we were moving forward and looking at it, this would have been a sell. Set the stop right here off the 20. Sell. That would have scared me right there, that bar right there. So then let's go down to the bottom of that bar. Let's get out completely. Here we have and keep in mind, you can play off of the previous day's close. So there is support coming from here. One other thing to touch on why this one, we didn't draw the Fab 4. We were looking at the Fab 4 here, but what really made us jump in here was that it was bouncing off of the 200 on the 15 minute. And that's a real good indicator that things are going to change. All the indicators and the time frames, they work the same. It's just they're on different times. So bounce off the 200, that's the strongest indicator. So doing that on the 15, it's just going to indicate that that's going to really work pretty well on the 2 minute. And that's what that did. Our next trade, of course, was here, or would have been here. There's the mini micro whale. Now we have a bull 180. Don't get too much movement. Keep in mind it's 11. Might go flat. 12, we're usually out of the market unless something exciting happens. One could say that this was exciting, this bull 180 right here off of a flattish 200. With that being the case, set the stop below it. And then how do we held on to it? So a nice whale right there. And it goes even higher. That right there is a sell. Wide state. Sell into that bar. Sell more here. didn't quite go down to the 20. But if you combine those two bars, that's a bull 180 right here. Set the stop. Goes skyrocketing up. Next stock we traded was Uber. So with Uber, keep in mind this is a takeout of a green bar. So we could say, hey, this is a large enough takeout. It's over 50%. Sell. Set the stop right here. Sell. Set the stop right there. Maybe you ride to here and get out majority of your shares. Maybe you don't. Maybe you wait for it. That's what we did. We didn't catch the initial move. And then we caught this bull 180 or bear 180. Sold it here. And we got out another one quickly. Ideally, we'd like to ride that a little bit more. But although we learned the concept or ingrained it on us on Friday, it's still not solidified. So bear with us while we get to using that strategy more and more. Right, that is riding the trades a lot longer. So now it's flat 200 or 20, flat 20. Which way is it going to go? Which way is it going to go? Looks like it's going to go down. Wait for it to pop up. That might be a sell right here. Remember, that could be a buy, but usually when it's break, so we're not going to touch it. I would sell this. It's a little bit above the 20. Doesn't seem like it works. That's a buy for certain. That's an elephant bar. Set to 20. And I'd say well complete. Get out. Looks like it had a little bit more. Probably had a sell right here. It's off the 20. That would be a color change right there, so you could sell more. So you have here off the 20, sell into that bar. After Uber, we have Intel. Intel would be Fab 4 here. We'd X out the 200 because it's out of play. The first bar is green, nothing to the left. You'd buy into it, set the stop. Unfortunately, you'd get stopped out there unless you had a 2 bar. If you had a 2 bar, Set the stop 1, 2, you'd still be in it. New high you could take, or let's say you let it play, you could take here. Now what we ended up doing, we missed this because we were in other plays, but we saw this green bar takeout on a flat 200. That's a go-to move. Bought into it, got out rather quickly. I think we could have left that for another bar, but the way we were looking at it, just wanted to go to new high because we were looking 1, 2, 3. We were thinking we're on our third leg. Or 1, 2, 3, our fourth leg. We're looking at it like we're on our fourth leg. And I don't know if that's really how to look at it, but that's how we were looking at it. This right here, I'd probably sell. Not really. I don't see any reason to sell that, to be honest with you. Maybe you could sell this one for 80%, but this one definitely. But even though you're in the position of power, so, don't expect too much. Again, position of power. Could sell it to around the 20. Around the 20, usually we play it up. Don't get the double bounce, so we missed it. This seems to be curling over. This could be a red bar takeout. Sell there. And you get a nice move. And that would have been a move of the day. Had you got something like that. And it bounced off the 200 like it would, like it should. And then it still overall went down. And then you even got another takeout to get even more. $13. Don't really have anything. I'm going to say we don't have it. I mean, I'm not taking that. You could, but I think that red bar is a little too aggressive. I'm not taking that just because of that. I'm not taking that. One could take this bar right here. Maybe take one bar like this. Set the stop below. Set the stop below. Get out at the 200. Looks like it's having a little resistance here. We like to play the flat 200s up. So let's see what happens. This gives us an indication you should play it down. This gives us an indication you should play it down. That's a bear 180, bear 180. So let's say we play the second one, bear 180. Stop. Went down. So that's Intel. Next one is Walmart. And we only traded maybe like 9:36 to like 11 today. We had physical therapy, so I mean, if you're concerned, but we just had other things to do, so we would have had a better day, but just things were limited. Walmart, here's an interesting case study. So the Fab 4 would be here. The stock went from all the way down here to all the way up here. That's a lot to go through. You see this. That's a tail bar. You'd sell into this. And I would sell to the flat 200, but it looks like it went even deeper. And you get a color change here, so you could add more. Go this deep and play it to the previous day's close. And then you could even play off the previous day's close on a green bar color change right here. Get that. What we decided to do is we're on a position of power, and we do a bull 180. Take that position, goes up. We take it out here again. 1042, we're leaving at 11, so we just didn't want to stick around. Had we stuck around, it looks like we would have made a little bit more. Now, this looks like a sell right here. Bear 180. Nope. Yep. Keep in mind that usually we try to avoid this 12. This is usually slop. Back, forth, back, forth, back, forth. Choppy. You'll lose all your money playing around in choppy markets. Here was 14. Maybe get in here. Set the stop right here. I'd probably get out, but it looks like it went a little lower. So the other ones we didn't trade, but we can look at is C. C, you're looking at Fab 4. 1, 2, 3. You're looking at a position 3, so you play it down. Maybe you play down here. Can't expect. You want to aim for 50%, but that's a large move regardless, so maybe you get out there. You gotta move off the 20 here. You get a elephant bar. It takes out all of that there. That would have been a great trade for the day. I'm looking at this as a bull 180. Set the stop below. Market law 4, I think. Set the stop. Even though this is position of power, might go down. eventually did, but not when I expected. Maybe bear 180 here, hold it, and then the next one, Merck. It's Fab 4. Tail bar, sell. Get out. Color change. Hockey stick, get out. I'd probably sell this one even though the time is close to 11:30 or 12. Get out of it. Oh. Now we're still in chop. Wait for 14. Off the 20. Set to stop. Nope. This is an indicator that it's a 20 like. This is a large red bar, so after a red bar, more red bars usually come. Wasn't the case. That would have got us. But we should have been saved by knowing to not play a 200 that's acting like a 20. So that's the review for today. Hope you learned something. Getting better. Hope you're getting better too. Till next time.